Hello and welcome. You're watching Ringgit Sense Plus, and I'm your host, Azaria Tagaya. In today's episode, we're going to be giving you tips on buying your first home. Now, you may have heard that the majority of the new homes sold in the market is beyond the affordability range of most Malaysians. So we wanted to know, if you're earning less than 3,000 ringgit, can you actually buy a home in the Klang Valley? And what are your options? We posed these questions to property investment expert Faizul Ridzaun.
Faizul Ridzaun runs a property consultancy company that helps customers buy property. He says besides government housing programs like Rumah Whip or Prima, it is possible to buy property on the secondary market with a salary of less than 3,000 ringgit.
We've helped someone last year on a basic salary of 1,008 to be able to afford to buy a three-bedroom apartment, walkable to an upcoming MRT station somewhere in Damansara. So the question here is that, is there such supply available? The supply is available, but is people aware of these supplies? Not so sure. And for most people, they are not, because people tend to look at newer properties, but the property that I just mentioned is a property which is about a 10-year-old property. So it doesn't look as good, but location-wise, it's still pretty good. It's not a low-cost flat, but it's a low, medium cost kind of like apartment. So such stocks are still available today, even in good locations like Damansara. I am not sure if the public is looking at the right places or being educated to look at the right places.
According to Faizul, if you earn a monthly income of 2,000 ringgit and don't have high financial commitments, then banks should be ready to finance you. So that means avoid buying a car with a big price tag and pay off your student loans as early as possible. Faizul says the challenge in finding financing for your home is harder if you earn less than 3,500 ringgit.
If your net income per month is below 3,005, the calculation is different compared to those who are above 3,005. I can give the simple mathematics. If you make 4,000 per month, every 1,000 that you make becomes 100,000 loan. So if you are earning a 4,000 per month net income, so you can actually get a maximum housing loan of typically about 400,000. The same calculation though doesn't apply to the B40 group. So that means if your net is below 3,005, then typically you can only use maximum 20 to about 25% of your monthly commitment, monthly income as your loan. So essentially, if someone makes about 2,000 per month, they can only get 100,000 loan. So it's half of that.
Buying property on the secondary market also has its challenges, as banks won't give you a 100% loan. You need to pay at least 10% for the down payment.
When you buy sub-sale, typically you need to basically cough up the 10% down payment, which is actually quite heavy for a lot of people. So if they don't have the right skill set, they will not be able to buy property using as minimal capital as possible. And they have to save up the 10%.
Statistics show that there's a large property overhang in the market these days. So what effect will this have on home buyers, especially first-time home buyers?
Starting from next year, I foresee that these unsold stocks will become more of a fire sale. So when they become a fire sale, things which is 650 2 or 3 years ago might be available at 450. So what is beyond the reach of a first-time home buyer 2 or 3 years ago, now it's completed. Developers say, you know what, I just want to sell it at whatever price, and they sell it at 400, 450,000. That's when, for example, it will have some form of impact towards first-time home buyer. The best thing about this is that the property is already completed, and for these guys, for them to go and buy, they don't have to pay a lot of interest, and typically they don't have to pay so much money to go and buy. So 5,000, you'll be able to buy a house, decent location, all completed, no need to pay interest, you can move in immediately. So that's the best thing about property overhang. Property overhang means property developers have to be realistic in their assumption. They have to pare down the price to the point whereby it's more friendly, it's more feasible for the first-time home buyer to basically go in and buy properties.
Faizul adds that developers have already started building smaller 3-bedroom apartments and condos to help bring down the price. Meanwhile, in the secondary market, prices too have gone down to a level that's more realistic.
Even for sub-sale, especially on the middle to high-end category of property, the prices has continued to fall. Yeah, we've seen, for example, 3-bedroom condos that used to command 650,000, 700,000 in Wangsa Maju, today has dropped to below 600,000 levels. No, but I wouldn't say there's a drop in property values. I would say property values are normalizing after a spectacular, people are just speculating and, having some unrealistic expectation that if I buy a property, I must make 200,000. It's no longer the case. People just have to be realistic. I don't even think 600,000 is the market value of the property. I think it's 550. But so it will continue to slide. So it will appear that property market is bad and property prices are sliding. To me, the answer is that property values are normalizing to the point where it should be priced.
What about people who have trouble renting out their property, especially if the rent that you're earning is less than the mortgage that you have to pay?
My advice to people who have actually entered the property at the wrong price and have problem renting is to basically do this. Number one, fully understand the market segment that they are operating in. Number two, prepare the unit to what the tenant wants instead of what they want. Right? A lot of people seem to think, I like this, I like pink color, walls, and therefore I think a lot of people like pink color walls. The reality is that people like, neutral color walls, right? And what they can also do is that instead of renting a whole house, they can actually break it to rental per room or even by rental per head.
So should first-time homebuyers wait a little longer next year before buying their home? Faizul says buyers can wait, but not to wait too long. Instead, they should take the time to do as much research as possible. There are many property talks they can attend and materials they can read online.
Of course, I would prefer to encourage people to learn a little bit more about this idea of buying property using as minimal cash as possible, because it can really be done. It's just that people, when you don't seek the knowledge, you wouldn't know, right? So if you can find today a seller which is a motivated seller, so typically a motivated seller doesn't even need 10%. And I've seen cases in the last 12 months, the seller only requires 2% down payment and that's it. Right? So the idea here is to find, number one, motivated seller. Number two is to learn the skill set of being able to buy the property using as minimal capital as possible. If you can understand those two, you're not required to then save up, a full 10% down payment. So that means instead of waiting 3 or 4 years with the possibility of property price increasing, you can actually buy today, locked at today's price point, by finding a very friendly seller, a little bit more motivated seller who is okay with you putting as little cash as possible.
After the break, we speak to the Home Buyers Association of Malaysia on what first-time home buyers should be wary of. In the meantime, do visit us on Facebook and YouTube to watch today's interview and also previous ones that we've done. Be back after the breather. Back with us on Ringgit Sense Plus, you're still with me, Azaria Tagaya. Today we take a look at the property market and what it means for consumers. Now this time around we speak to the Home Buyers Association of Malaysia, HBA, to take a little look back at Budget 2019 and what it means for potential first-time home buyers in the country. What are the positive or negative impacts on the prospect of home ownership? Let's watch.
So we want to talk about consumers and what kind of houses they can actually afford. But before we go into that, we want to talk a little bit about the budget. Now, it's been a while now. The wheels have been in motion. So we kind of know where it's going. But for you, what are the biggest takeaways from Budget 2019?
Well, the National House Buyers Association acknowledges the challenges of our Finance Minister, Tuan Lim Guan Eng, in his maiden public address or the Budget 2019 that was tabled on 2nd November. We find that it is a pretty good, challenging budget in view of the economic slowdown and, of course, a steep drop of our ringgit. But overall, it is a very good budget. A lot of benefits for first-time house buyers as well as affordable category house buyers.
Anything that you don't agree on?
There are several items that we don't agree on which have been highlighted in the press. One of which is the real property gain tax. Currently, anybody who buys property, within 3 years, you get a tax of 30%, then subsequently 20% or 15%. But beyond 5 years, that's 6 years onwards, there is no more tax whatsoever. There's exemption. However, with the recent budget, it means that anybody who buys more than beyond the 5th year also will be levied a tax for 5%. That is utterly unfair, because people who buys the property and preserve their property for more than 5 years to us are genuine buyers. They are not speculators. Mind you, do not forget the real property gain tax was previously known as anti-speculation tax. So it was intended against speculators. But if the government thinks that they need to increase their coffer, by all means increase the real property gain tax in those earlier categories. People sell earlier. Instead of 30%, impose 35%. We are okay with that. Those are people who buy and sell. Those are flippers, or those are investors, by all means. But do not tax the group of people who are genuinely keeping the property. There are a lot of reasons why people keep their property so long, because sometimes beyond 5 years they sell because they want to finance the children to studies. Sometimes they want to sell a property so that they can upgrade from a condominium over to maybe a terrace house or a semi-D. Or some other reasons why they sell is because they need to finance the children's education or their businesses, all that. So I feel that they shouldn't be taxing anybody who keeps more than 5 years and beyond.
In this regard, HBA has done their part to highlight this issue in the mass media.
Yes, we have on several occasions highlighted in newspaper, and then apparently the minister came to know about it, and he has said the public concern over certain areas, and therefore he has now relented to say that, okay, the calculation will be based on the year 2000 onwards, meaning that he allows a grace period, meaning any sale whatsoever, but the calculation will not be based on previous date of acquisition. Say you acquired 30, 40 years ago. It will be from the year 2000, meaning for the last 18 years. Our problem here is, again, how do we keep the papers in the year 2000, assuming that I know I possessed a property 30, 40 years ago, or inherited a property 20, 30 years ago. And who is going to do the calculation or valuation based on the year 2000? We're going to rely heavily on the government stamp duty or valuation department. They will have the statistics. But what is there for us to challenge the statistics subsequently? Or rather than muddle the whole thing, or real public gain tax, why don't the government be just like the previous administration, do away with taxes beyond 5 years? That'll be better, clear, and it's supposed to be the better PH government.
HBA has also cautioned against proposals to review stringent housing loan requirements imposed by banks. According to Datuk Chang, giving consumers so-called easy credit is not the right way to resolve the issue of home ownership in the country.
Now, easing of a credit is not the solution, okay? When the persons get 100% loan, there's no more responsibility there. He does not have his commitment to pay the down payment whatsoever, stamp duty, legal fees whatsoever, if he's going to be pampered with 100% loan. Our take is that anybody who takes a 100% loan is not a genuine house buyer. They are ones who are there just to flip and buy and probably flipped it. To become a responsible house buyer, you should at least come up with their own initial capital of 10%, 20%. Without 10%, 20%, I would rather tell the house buyer, don't buy. You've got to balance the risk between buying and renting. Renting is a much easier solution. If you are not happy, you can pack your bags and go off. That'll be easier. Like for instance, you stay in Kuala Lumpur, you work in Kuala Lumpur, then you get uprooted to transfer to go to Penang to work. You can just pack your bags and go over to Penang, rather than tied up with a 35-year-old loan, and you've got no choice but to pay installment diligently, whether it's working in KL or in Penang. You've got no choice. You get tied down. We always tell house buyers, balance the risk between buying and renting. Go and have a life.
Datuk Chang's view is quite the opposite from property investment expert Faizul Ridzaun, who earlier in our show encouraged first-time home buyers to find ways to learn how to not pay the 10% down payment. Safe to say, most Malaysians will think about the prospect of home ownership as soon as they are able to maintain a steady income. After car ownership, house hunting seems like the next logical step in building your future life.
From the studies that were made and the reports from Khazanah Research Institute as well as Bank Negara Malaysia, anybody earning about 3,000 and below, they should warrant buying a property anything less than 150,000. 150,000 property, there's not many around at all. A lot of people don't like to stay in those low-end property or rumah kos rendah, all that, is it? Because there's a stigma there. Yeah. For a person earning about 3,000, I think you should not hurry into buying a property. You should, along the way, build up your career, find a place to rent for the time being first, with a solution future to buy. Perhaps you can even consider the rent to own. Government is coming up to an RTO thing, rent first, own later. Yeah. So meaning the part of your rental will be used to pay installments in the initial capital, all that. That would be a good idea.
Statistics have shown the level of property overhang in the country to be somewhat worrying. According to the National Property Information Centre, there were 29,227 overhang residential units in Malaysia as at the first half of 2018, valued at 17.24 billion ringgit.
The developer keeps saying that they are not able to sell the affordable housing. Why is it that the banks as well as the government are compelling them to build affordable housing? Now, they got to get the affordable housing definition right. To us, affordable housing is three categories. Anything below 300,000 would be affordable. It could be 150 to 200,000 or 250 to 300,000. That is affordable housing category. Affordable housing must also include at least minimum 800 to 850 square feet of property. It cannot be a shoebox unit of 300 square feet or less. That is not, it's not durable. It is not conducive to bring up a family. And thirdly is that it must be situated where transportation is available. You cannot build somewhere in Ulu Yam with a beautiful condominium. At the end of the day, there's no transport at all.
Well, the next step in buying a home is to find out if you qualify for financing and start looking at loan options. After the break, we find out exactly what options are available to you. In the meantime, if you found any interesting takeaways from today's show, head on to our Facebook page where we have posted clips from today's program, which you can share with your friends. We're going for a short breather, and I'll see you on the flip side. Welcome back to Ringgit Cents Plus. You're still with me, Azaria Tagaya. If you just joined us, we're talking about buying your first home. Now, even if you don't have enough money to pay your down payment now, it's always good to know how much a bank will be willing to lend to you. What are your financing options and how are interest rates calculated? Well, we spoke to RinggitPlus, an aggregator website that allows you to compare home loans to find out more.
According to Hann Liew, the CEO of RinggitPlus, first-time homebuyers should first be looking at the incentives provided by the government, like the Rumah Pertamaku scheme.
What many people don't really understand is that it's not the government that gives you those loans. It's actually the existing banks themselves that give you the loan. And the government comes in to ensure that the value of the loan is guaranteed. Some part of the value of the loan is guaranteed by the government, right? So it's not like, oh, I either go to a bank and then the government for loan. It's still the banking institutions. You still have to do your research and compare, especially if you're a first-time home buyer. But if you're under 35, the government comes in with a little bit of the guarantee of some part of the loan to ensure that you can actually get the loan.
Once you've made up your mind about which property you want to buy, have the documents ready for the banks. It differs for new homes built by developers and the ones that you buy from the secondary market.
It depends on whether you're buying a new property or you're buying a property from an existing owner, so already built, right? So for a new property, it's quite simple. It's things like your booking form, your sale and purchase agreement, as well as your basic income information. Right, but for existing property, it's usually things like those things, yes. So your sale and purchase agreement as well as your income documents, but also other things like what's the current value of the property. So valuation reports from accredited valuation people. So those kind of things start getting more important. But if you ask me in terms of volume of documents, for first-time home buyers, new properties, generally require a little less documents.
To increase the chances of the bank approving your home loan, you should first know your credit score. Hann offers 3 golden rules you can follow.
There's just 3 golden rules you need to think about with approvability. The first is deposit. Is your deposit enough to convince a bank that you have the financial capability to afford this property? And most people recommend a minimum of 10% deposit. I'd say to increase your chance of approvability, it's best to have something closer to 20%, because that gives any banking institution the confidence that you have that financial capability to afford this house. So the first, deposits. The second, installment to your salary or income, right? Generally most people think of affordability in terms of how much installment can I afford, but from a banker's perspective, it's usually some sort of percentage of your gross or net income, right? And so then the big kind of golden question is, what is that percentage? Again, it depends on people to people, but in terms of a banking institution, they'd be very nervous lending to somebody which installment is more than 50 to 60% of the individual's income or the couple's income. So second, installment. And third, in terms of increasing your likelihood of approval is obviously, if you're under 35, to choose the right products, right? Make that comparison. Say, hey, for an under 35-year-old, do you have a scheme rumah pertamaku loan when you're asking for a banking institution? So that those products are available to you. And obviously, if you're under 35 and you want to buy a property less than 400,000 ringgit, those products have a higher degree of approvability because some part of it is guaranteed by that government scheme. So those are kind of 3 things: deposits, installments, and then for young people, the specific product that's tailor-made for you.
We also asked Hann if consumers should apply for a bank loan from various banks at the same time or just apply to one bank at a time, which will increase their chances.
Regardless of which bank you choose, like you have those 3 golden rules I said earlier in mind when it comes to affordability, because once you have those, most major banks will make similar assessments about your affordability, right? And after that, it's about choosing which banks you want. For me, it's striking the balance between applying for the number of banks that will increase your chances of approval, and applying for too many, not just because it's a big hassle to apply for 5, 6, 7 banks, right? But it's also because frequent application for credit products in a short period of time may not be viewed favorably by some banks. So it's about striking that balance. If you ask me, 2 or 3 sounds about right.
As an aggregator website, you can search for a loan on RinggitPlus.com. Hann says the website makes it easier for consumers shopping around for a home loan to compare different parameters and see side-by-side comparisons.
I mean, there's really 2 main parameters. The first is product eligibility. Like, are you eligible for this product? So are you in the right age? And are you in the right income range, right, for this? And then the second is not just determining eligibility, but also being able to see the rates for specific products. So at the moment at RinggitPlus, our role is to just put the rates on, allow you to see the advertised rates of the banks. Going forward, we expect to be able to tailor-make individual rates that the banks can offer depending on your specific circumstance, not just a general eligibility.
Take the time to do your research and know how much you can afford before you purchase your first home. That way you know if you're financially ready to make that purchase.
Well, buying your first home is probably going to be the biggest financial commitment you're going to make, as the loan will take most of your working life to pay off. We hope the tips we offered you today has started you off on the right path. Now, if you want to watch today's interview and other extended versions of the interviews, go to our Facebook page. We'll see you next week. I'm Azariah Tagaya signing off. Till then, invest and save wisely.